we actually wanted to talk to you about Operation Chokepoint, and we got some time. We can cover a bit of that. So you might correct me if I'm wrong here, but you're the first person I remember talking about this in Bitcoin. I don't know if somebody raised it to you first or you saw some discussion, but are you taking credit for it?
I probably coined the term Chokepoint 2.0.
Yeah.
I'm probably not the first person that had ever pointed out that Bitcoin companies have a hard time getting banked. I think everybody knows that.
Yeah.
But there was a really specific set of events that happened around the turn of this year that turned it from like a low-level continuous thing to a kind of acute crisis.
And do you believe this is a concerted, coordinated campaign to choke crypto out for more sinister reasons, or do you think you can point at things like FTX and say, you know, I think if you're a policymaker, you don't really understand Bitcoin and crypto, and you think your job is to protect people. You see things such as FTX and maybe add GBTC in there or BlockFi or any number of faders and go, well, this is all fucking crazy and this is terrible for consumers, and yes, we should protect them.
Yeah, you don't need a sinister explanation. That's the explanation. So in the US, we know it's coordinated. We absolutely know that. It's certain officials in the Biden administration that are working together with specific regulators, in particular the bank regulators, to marginalize the Bitcoin and crypto industry. In the US, I'll limit my comments to the US for now, as a reaction to FTX in particular, and also because of the midterms, because Congress became split between the Democrats and the Republicans, and the regulators, the executive branch, realized Congress is not going to do anything about crypto because the Republicans are more favorable towards it. They won't pass any anti-crypto legislation. So the executive branch realized, okay, we got to take it upon ourselves and do something about this. And their preferred means of doing that, it's a high leverage tactic, is to deputize the banks, to get the banks to do their dirty business for them. And they basically signal to them very clearly, don't deal with crypto companies. Don't bank them.
But do you think this is a consumer protection policy, or do you think it's, now we've got the opportunity to do what we've always wanted to do, is get rid of this because of the likes of FTX?
There's an overt hostility in the Biden admin towards the Bitcoin and crypto space just latently. They got the political go-ahead to do it post-FTX because FTX really did actually change sentiment towards the crypto industry in this country. Absolutely. So it gave them political license to do that. But I think it was opportunistic. It was, crypto's out of control and we need to do something about it. The other thing is there was a view that the crypto space could actually destabilize the established financial system. And so they wanted to insulate the traditional banks from the volatility of the crypto industry. We know that that's not the cause of the banking crisis.
Yeah.
The cause of the banking crisis is interest rates being raised very quickly and depositors becoming very concerned about the banks and withdrawing their funds really quickly. So those two things are the main causes. Crypto, Bitcoin, the industry going up and down, that's not really the cause. Although it's unfortunate for us that the first three banks that collapsed, they all had some portion of their business was crypto related. So initially there was an attempt to blame it on the crypto space. However, as more banks started to fall and collapse that were just regular banks, they stopped being able to do that.
Yeah. Can we just do a quick TLDR on each one? Silvergate, I was a big fan of theirs. I've really liked Alan Lane. Met him a few times. Think he's a good guy. It feels like they at least tried to wind down the business professionally and ensure everyone was protected. But they also, at the same time, they very quickly went from a position of appearing to be a very strong bank, traditional bank, that had decided to take the move and support crypto and Bitcoin companies, but very quickly found themselves unwinding. What was the background to this?
So Silvergate, they are actually choosing to voluntarily liquidate, which is something that people miss. That's very rare for a bank. So they're actually winding down all their operations. All of their depositors are made whole without the federal government having to step in, right? So they're not like the other banks where they collapsed and there was a loss that the government had to insure. Silvergate chose to wind down. Now, the question is, why would they do that? Well, on the one hand, they did service almost exclusively the crypto and the Bitcoin space. And so as 2022 went on, their depository base drew down because a lot of their clients were kind of going bankrupt or something like that, right? They also did service FTX Alameda, and so there were investigations launched into them. Some senators questioned their solvency. In fact, Elizabeth Warren and some of her colleagues, they overtly questioned the solvency of Silvergate, which of course, if powerful senators are questioning your integrity, you as a depositor, you're going to leave, right? So that helped fragilize the bank. The other thing that happened was the FDIC, the Depository Insurance Corporation, they started to totally ratchet up the scrutiny against Silvergate, basically saying, send us lists of your clients, send us all this data, like tons of bureaucratic tasks, which made their life a lot more difficult. And the Federal Reserve went to Silvergate and said, you need to eliminate your concentration risk. So you can't have more than, let's say, 15% of your deposits pertain to the crypto industry. Now, Silvergate was pretty much a crypto-facing bank, right? They serve crypto companies. So this 15% threshold means it's another way of saying you can't run your business anymore. So the combination of higher compliance costs to serve the crypto space plus this kind of artificial 15% threshold meant that their business model didn't work anymore. So certainly they suffered a bit of a run on deposits, but what actually happened was they realized they didn't have a business anymore because the government basically told them, you can't run your operation the way you used to. You can't be a boutique crypto-facing bank. So that's actually the reason they chose to liquidate in the end.
It reminds me of that conversation we had a couple of days ago with Peter St. Ange, where I'm becoming very sympathetic to libertarians, even, whatever my opinions are politically, but very sympathetic in that the amount of work the government does to make it hard to run a business and the amount of money they take from us through various taxation that stops us reinvesting. It's become really clear to me recently. The reason being is, I had a little bit of extra cash recently because of the podcast, and I was able to buy another business and invest and grow. And, I think about how much money I would have if I didn't pay such high tax and the amount of other businesses I could start or invest in and do things. And I know I'm a better investor and a better operator than any bureaucrat in government.
Right.
And so I've become very sympathetic recently. And that's just the same point. That is a successful business that employs hundreds of people, services lots of other companies.
They provided an essential service. They were one of the few banks that was explicitly, avowedly pro-crypto and allowed these crypto firms to do business in the United States.
But here comes the government with new regulations, which makes it hard for them to do business, which means a bunch of people have lost their jobs and a bunch of other companies are struggling to find banking services. So they are just squeezing good businesses for no apparent reason.
Well, and to be clear, they're not doing this through the sort of accepted democratic process, right? So what Congress could do would be to pass a law to say, well, under constitutional grounds, banks can't service the crypto industry. If they really wanted to do that, that would be the way to do it. What they shouldn't do, or they shouldn't be allowed to do, is to have bank regulators go to the banks and say, you can't do business with this legal industry. That's unconstitutional, right? That's a due process violation, right? That happened with Chokepoint 1.0, and it just was unconstitutional. It ended when Trump came into office, but they would have also lost the legal case. They tried it against other types of businesses, weed businesses, adult entertainment businesses, payday lenders, gun manufacturers. So these are politically disfavored businesses that the government sought to choke off through the banks. This time, the target was crypto. It's still unconstitutional, right? Federal regulators can't just persuade banks to not do business with the legal industry. That's not the way it works in this country. So that's kind of my real objection is it's not just that the crypto space has been victimized, it's that they're doing it in an unacceptable way that's not part of the social contract in America.
So how is it different with Signature and Silicon Valley?
So Signature is maybe even a more sinister case because they were actually sent into receivership by the New York Department of Financial Services in mid-March after the collapse of Silvergate and Silicon Valley Bank. And so they were nationalized, basically, right? So all the creditors were wiped out, the shareholders were wiped out, right? Apparently, this is what their chairman, Barney Frank, said. They were solvent at the time that occurred, right? So they were not actually in such a beleaguered state that they couldn't do business on Monday. They probably could have, right? But regardless, they were nationalized. So that's basically government seizing a solvent banking institution. That's very, very unusual, deeply unusual. In fact, I don't think it's ever happened before. Typically, when banks are sent into receivership, that's because they've failed or they're in the process of failing. So that was a very odd thing to occur. What happened after that was their crypto business. So they had this thing called Signet, which allowed their clients to settle up fiat between themselves on a real-time basis. Silvergate had one as well called Sen. Sen was gone. Signet was the only one left. So I think that was why they had a target on them. And Signet was not sold, even though there were bidders for it, right? So in the sale process that the FDIC managed, the crypto deposits were not sold and Signet was not sold. The crypto depositors in Signature were told, withdraw your funds, leave, find another bank. So the government seizes this institution, they run a sale process, they sell the bank to another bank, but in that process, the crypto business is stripped out and destroyed. So that to me is intensely suspicious, right? Maybe it wasn't a anti-crypto animus that was the reason they were nationalized, but the consequence was Signature, another explicitly pro-crypto institution, was taken out behind the woodshed and shot, and their entire crypto business was eliminated. With SVB, another interesting tidbit, SVB was not really a crypto-facing institution. They had Circle as a client, but that was about it. During their sale process, the OCC said to the bidders, you can't sell, you can't transfer or acquire assets pertaining to three things with SVB, the three C's: no crypto, no Cayman, and no China.
Why Cayman?
I'm not sure, honestly, but they were basically the politically disfavored portions of their business. So you can't acquire any crypto depositors, you can't acquire any Cayman depositors, and no Chinese startups that had accounts with SVB can be sold. So in each case here, we see a sale process managed by the government, but we see the crypto element stripped off and not included in the sale.
And so the point of Chokepoint 2.0 is to choke out crypto and Bitcoin and as such, because the idea of just outright banning this would take too long.
It wouldn't be possible, right? You wouldn't be able to persuade Congress to ban crypto. It's not like China where one person can decide. Like, you have to persuade the representatives of the people to do it if you wanted to ban the industry. That would never happen. So the idea was to do it in this roundabout, sly way and use the executive branch's power over the banking space to really hamstring the industry. And it worked, frankly. Today, there are very few banks that will accept a crypto business's money.
What can be done about that? Is there anything that can be done? Can you separate the banking sector? Can you insulate it from government interference?
No, because banks are public-private partnerships. They exist at the behest of the government. They're highly regulated, and they are insured by the government. That's what FDIC is. It's depository insurance that comes from the government. So banks are always going to be beholden to what the government wants. However, if you're violating the Constitution, you can, of course, sue. So certain injured parties are definitely contemplating, and I believe will, bring a case against certain banking regulators protesting the fact that the banks were deputized against the crypto space. So that's one solution. Another solution is congressional oversight, right? So the executive branch went around Congress, even though authority should have been vested with Congress. So certain members of Congress are now pushing back, subpoenas, potentially trying to figure out hey, hang on, why did the Biden administration go around us and exercise undue authority that they maybe don't even legally have? That's another solution. However, what's actually happening, the way people are dealing with it is entrepreneurs are going offshore. They're starting businesses in the UK, in EU, which has comprehensive crypto legislation, in MiCA. They're going to Hong Kong, right? They're going to China. So we have businesses that would exist here that are going elsewhere. They're going to Bermuda, Switzerland, Singapore, and Hong Kong in particular, right? So people are just leaving. So the American crypto industry has suffered this huge loss because the government did this.
How do you think this plays out? Because we do have an election in 2 years. Maybe I'm wrong, but I have a feeling the Republicans might win. It feels like we have a little bit more favor with some Republicans, not all. Do you think, whether it's DeSantis or whether it's Trump, do you think we're in a more favored position, protected if that happens, or do you think they'll do the same?
Yeah, I mean, DeSantis is, I think, explicitly pro-crypto. So that would obviously be better.
Anti-CBDC.
Certainly, yeah. Trump, I honestly don't know, but under Trump, Chokepoint 1.0 was ended. So I would presume that he wouldn't inherit 2.0 and think it's a good thing. So certainly a lot turns on the outcome of that election. And a lot of people are looking forward to it and thinking, well, if Biden wins the second term, it's actually curtains for the domestic crypto industry. So the other thing that could happen is there could be a successful lawsuit brought by the industry to restrain the banking regulators from doing this. The problem is, normally what would happen is, okay, there's an industry that really needs banking. Why don't entrepreneurs create new banks to serve this industry that's underserved? Well, they tried. That's what Caitlin Long's Custodia was.
They won't allow her to do it.
That was what the OCC chartered banks, crypto banks, were trying to do. Anchorage, Protego, Paxos, right? Those banks were run out of town. The OCC denied all of their applications. So the normal market process of creating new banking institutions to serve this underserved industry wasn't allowed to occur because banking charters are being denied. I do see the states potentially getting involved here because the states do have the right to charter banks. That's been one of their key rights historically. The government's trampling on top of that. So it could be the case that there is pushback from the states saying, hey, actually, we do reserve the right to charter these new institutions. So you should let us do it.
So hopefully Cynthia Lummis will do something in Wyoming and something will happen in Texas. And
yeah, I hope we see more defense of things like the SPDI in Wyoming. Wyoming tried to join Custodia's lawsuit against the Fed. I think they actually weren't able to. But I wouldn't be surprised if more states push back and try and seize some authority and try and charter new crypto-focused banking institutions.
It's so utterly frustrating to watch this being played out and this choke against something that we may disagree whether it's Bitcoin or crypto, but at the same time, this kind of choke out of these free market ideas.
Well, I mean, you had a great episode with Luke Roman recently where I think he described it like closing the theater doors before setting it on fire. And I think he's right. So I believe this is an attempt to impose soft capital controls on the American people because what they don't want is capital fleeing the system to an alternative. They want capital to stay in government bonds where the government has to run inflation really hot and keep yields relatively low so that they can reset their debt position, which is very high, right? So they kind of want people to stay in the formal regulated banking system because the banks hold a lot of these government bonds, right? That's what they want. They don't want people fleeing for the exits. And so to me, this does look like an attempt to impose capital controls, which the US hasn't had since World War II, right? Since Bretton Woods. But I think that's kind of where we're going now.